Hi, my name is Andrew Pang, and welcome to another edition of CMS Forex News. Today is May 29, 2008. In Japan, retail sales climbed 0.1% in the year to April, the weakest showing since July, and lower than expectations. Large retailers saw their sales fall 2.2%. Consumers are watching their spending as high inflation batters their confidence. In Australia, spending on new capital fell 2.5% for the first quarter. Firms may be cutting equipment purchases due to higher credit costs and in anticipation of slowing global demand. The Aussie-US dollar pair fell following the release. From a session high at 0.9640 prior to the release, the pair fell 90 pips to trade near 0.9540 as of 1:30 p.m. Eastern. In the UK, the nationwide measure of housing prices fell by 2.5% for the month of May and were down 4.4% on the year. The monthly drop is the highest on record, and the annual drop is the highest since 1992. The CBI measure of retailers saw that only 14% of respondents showed weaker sales for May, though they continued to pass higher costs on to consumers. The pound-yen pair, though dipping initially after the release, continued its rally. From its session low after the release, the pair was up 200 pips. It is now up around 440 pips for the week as easing oil prices prompted risk appetite. In Europe, the economic sentiment indicator, which combines the confidence of 5 sectors, stayed at the same level as it did in April. The 97.1 reading is the lowest since August of 2005, but expectations did call for it to fall even lower, which it resisted. A fall in consumer confidence to -15 was offset by increases to confidence in retail trade and slight improvements in construction and services. The Eurozone retail PMI rose above the 50 boom-bust level for the first time in 3 months, registering a 53.1 for the May period. It was a welcome sign for the economy, though with consumer confidence falling, this positive result may prove to be temporary. In Germany, unemployment change rose for the first time since January 2006. 4,000 people lost their jobs in May, as exporting firms had to cut jobs due to slower foreign demand. The higher euro is partially to blame for making German exports less attractive. In the U.S., GDP for the first quarter was revised to 0.9% from the advance release. Exports were lifted partially by the weaker U.S. dollar. Construction, trade, and retail sales were all revised higher and reflect resilient domestic demand. U.S. initial jobless claims this week was 4,000 higher than last week, totaling 372,000, pretty much matching the 4-week moving average. The number is indicative of higher layoffs, though not in the range that they were during the last recession. Continuing claims rose by 36,000 to 3.1 million, the highest since February of 2004, meaning these people that are getting laid off are having a hard time finding new jobs. For the Euro-USD pair, the markets focused on the poor consumer confidence in the Eurozone and the fact that oil prices continued easing today. By 2 p.m., oil prices were down almost $4, helping to propel gains in U.S. stocks. From its high overnight, the pair fell 180 pips in the dollar's favor and is now down about 300 pips for the week. The dollar-yen pair climbed more than 100 pips, breaking above resistance near 105.5. U.S. stocks rallied on the drop in oil and the better-than-expected GDP figures. For the week now, the dollar is up 250 pips. In Canada, the current account showed a better-than-expected surplus of 5.6 billion Canadian dollars. The goods surplus widened to 13.4 billion, up strongly from the previous 2 quarters. The growth in value in exports of energy products led the gains. The U.S. dollar-Canadian dollar pair wiped away the gains the greenback had accumulated during the week following the release, testing support at 0.9820. As New York trading continued, however, the greenback was able to pare some of these initial losses. Tonight, Japan releases a barrage of data to end the month, including releases on manufacturing, consumer prices, household spending, employment, industrial production, and housing starts. Overnight, Germany releases retail sales data, while the Eurozone will post its advanced CPI for May and also its employment rate. Switzerland reviews its leading index. Tomorrow, the U.S. releases information on personal income and spending, its Chicago PMI, and the final version of UMich consumer confidence. Canada will post its monthly GDP and producer price index. And that wraps up the day in Forex news. Join us again tomorrow right here at cmsfx.com. Until next time, happy trading.